All right, so welcome to another quick update on the account. Yep, on the account, we are going to be talking about the US dollar this particular cycle. Yep, this is the SOGCapital.com website. This is the landing page. There are blogs now. I've started writing blogs on the site as well, so you can go read, how to piece macro together with the technical and all of that. I will be, churning out information on the blog from time to time, educative information. That is what we seek to do over here. Now, this is the complete guide to macro trading for beginners in Africa. I put together, a complete guide. You can go read. It's about a 12-minute read, not that much. You can go read about it so you can understand exactly how to piece the two together. All right, so let me give you guys an update let me switch to the tracker first of all. Yeah, so let me give you guys an update on the $200 account. At the month of June, this is where we sit. Let me switch to show my trades. Yeah, so all right, so currently you can see profit wise where we sit with respect to profit. We made $1,473 profit at the moment. Um June has been our biggest month. I'm gonna show you guys. June has been our biggest month. June, you can see how steady the growth, curve has been. This is a big jump. That's June. Okay, so you can see how in March, when we started trading the account for my friend in March, we just did 100% profit. In April, we did 32%. In May, we dropped to 8%. Then in June, we made a 193.74% in the month of June. That is big. We've already started July in red. We've already started July in red. We lost some money this morning. I was testing a couple of things, running a couple of test on the account. We lost some money this morning. Let me switch to the monetary value. Okay, so you can see how much we've been adding per month. March $213, April 135, May $44. April and May were very, very difficult months. Like I said in the previous video, they were tight, the market price was in the tight spot. Even though, the macro, and I think April and May. I think it was tough because of where FOMC was at the latter part. So we did not have any, you know, new data to push the market. So it was tough. But in June, I think FOMC happened early. So, I was positioned ready for the move because ending of May, the FOMC that came out in ending of May gave us an idea as to what June could potentially, what the Fed could potentially say in June. So June was just that month. And we returned 1.15. So that's $1,000 profit in June. July, we're already down by 64.80 US dollars at the moment. It's not funny, but I mean, it is what it is. So year to date, we are up on up 1.47K. Yep. We've got 6 more months to go. July just started. We've got 6 more months to go. Let's see how July would go for us. Our win rate is 50.5%. It's not huge, just that we win. We win big when we win. That's how we trade over here. I swing trade because it's a small account and I'm trying to build the account. I can't really go in with those aggressive kind of trades. So even though I'm a little bit aggressive, not too much, but we do it as we want to do it. Okay. So you can see gold has been my highest paying trade, my highest paying pair, $744, followed by pound, $390. I think in July I might focus more on gold and pound because I see gold breaking below 4,000. And if it breaks below 4,000 with this dollar strength that I'm seeing, we should see gold try and make its way to $3,500 in the next couple of months. So that is the move I'm trying to capitalize on next. So I'll be watching gold a lot. I'm watching pound as well because I'm thinking the pound could also drop below 1.3. That will open it up into the 1.3, 1.2 range. And that is about 1,000 pip range. But if I'm shorting pound from where it currently sits and I'm expecting it to break below 1.3, then I'll be looking at the pound dropping down to 1.25. That will be my next take profit, ultimate take profit on the pound. I have no open trades at the moment. Everything is, I've closed everything. So I'll be switching to the chart. I want to explain certain things to you guys. I'll be switching to the macro tracker, and then I'll be going to the chart to explain a couple of things to you guys, how to piece the two together. You understand? How to understand direction from the macro perspective, which I've already done for you. I've done the whole breakdown for you. Yours is just to get access to the pro SOG Capital Macro Tracker so you can see the DXY bias score, which is really, really important. All right, so I'll be switching up. I'll be switching to the charts. First of all, to the macro tracker, so we can all take a look at the current DXY bias before I switch to the chart. Okay, so switch to my pro features. Pro features. Yep. Hold on for me, yeah. I need to I need to switch my screen. Switch my screen. There we go. There we go. All right, so currently, um, from all the data that we track on the macro SOG Capital Macro Tracker, the DXY is bullish, and you can see the current macro, the current macro setup. You can see it right from here. The current macro setup leans dollar bullish. The data fundamentals, CPI, PPI, and jobs are pointing to a strong dollar. Note large speculators are adding long dollar exposure until the data picture shifts. The path of least resistance for the DXY is higher. And today's NFP. Today is Thursday, but NFP comes out today. Ideally, it's supposed to come out on a Friday. I think tomorrow is a holiday. That's why. So NFP comes out today. So per the Fed policy stance, they are on hold. The Fed held the rate steady at 3.5 to 3.75. That's the last FOMC. The statement itself offers almost no explicit forward guidance. It is notably brief and ends simply with the committee will deliver price stability. But the SCP dot plot speaks loud that the median 2026 Fed funds rate projection rose to 3.8%, up sharply from 3.4% in March. So inside the Fed themselves, they are forecasting a higher interest rate. So that is dollar supported, that is dollar bits, that is dollar strength from that particular SCP dot plot that the Fed released in June alongside the FOMC. So the Fed dot plot is here is rates. You can see all the indicators that we are tracking. Fed dot plot this year is hawkish. The labor markets with the job boots beat per the last NFP hawkish, pressure. Inflation CPI is higher, came in 4.2% year over year. The prior one was 3.8%. PPI, inflation pipeline higher. Fed CME currently sitting about 32.1% hike probability. That is also a bullish. Markets are pricing 32.1% probability of a rate hike at the July. Markets implied 3.5. So it's clearly, so you can see all these are all green. COT speculative is also bullish at the moment. So green, 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 green. The only thing that is it's not even bearish, it's neutral, is the Fed policy stance. They are on hold at the moment. But then, the factors that they are concerned about are all pointing upwards. They are really much concerned about inflation at the moment. And everything that should come in for inflation to weaken is not happening. Everything is pointing to inflation staying higher for longer or even, going higher. And that would make the Fed either, you know, reposition themselves with respect to interest rates going higher, or it depends on what's going to happen going forward. But as of now, per the current cycle, inflation is high. The Fed, the dollar is supported because of all these data prints and fundamentals and macro. So bullish DXY, that means I want to be buying the dollar, not selling. bullish DXY. I want to be buying the dollar, not selling. What a lot of retail traders fail to understand is the direction of the market is determined by the macro and the fundamentals, not the technical, not the technical. Not the candles don't give you the direction. That is what a lot of retail traders need to understand. Direction or where value sits comes from fundamental and macro, not the candlesticks. I don't know how well we have to talk about this thing. The direction and trend of a market comes from the macro and the fundamental, not the technical. The technical only gives you when to enter or where to enter. It does not tell you market direction. That is why I have a problem with top-down analysis. I know a lot of you do, a lot of retail traders use it and if they feel like it works. It only works because most of the time it lines up with the fundamental. The moment top-down analysis deviates from the fundamental, it will stop working. Or from the macro, it will stop working. So, per what I'm seeing here, DXY currently bullish. So I am only looking at buying the dollar, not selling it. You understand? So week upon week, whenever we get into a particular week, I am looking for buy signals on the US dollar, not sell. I don't want to sell it. I want to buy it. So anytime price drops on the DXY during this particular cycle, I'm excited because it's an opportunity to buy. You understand? Anytime price comes lower, I'm excited because it's an opportunity to buy. I'm not seeing price coming lower as a break of structure or change of structure because structure or value actually sits with the fundamental or the macro. So anytime DXY drops in price, I'm excited because it's an opportunity to keep on buying the dollar while we sell other markets like the pound, the euro, the Aussie, and all of that. So I'll be switching to the charts now so we can take a look at what is currently happening with DXY this particular week. There we go. Yep, so let me switch to the dollar index. This is a dollar index, and so this particular week, and I look at the market from a week to week perspective as well. So this particular week, the dollar has been bearish. Dollar has been coming down. Dollar has been bearish this particular week. Yep, coming lower. Dollar has been trading lower this particular week, and it's good. It's good because it gives us opportunity to go long. All right, it's good. So the further it drops, the the more opportunity we have to buy. Yep. So, um, we were up above 100, traded above 101. Now we've got back to 101. I don't know if 101 is going to be the price where dollar holds, but I hope it is. I hope it is so I can buy. I would really be happy if I could position myself. I could position myself going into NFP. I'd really be happy to if I would position myself going into NFP. But I like to position myself before big data. You understand? Yeah. So, dollar has dropped down to 101. I don't know if 101 is going to be the price where he holds. I really don't know. All I'm just watching is waiting for candle patterns that will give me the opportunity to buy. You understand? Yes. So, I mean, even if it drops down to 100, I mean, it's all good. That's a deeper pullback, and we could, buy it from a better price even at 100. But I doubt it's going to come to 100. I really really doubt. I doubt because of the. I don't think it's going to come all the way down to 100. I don't really think so. I don't really think so. So let's see. Dollar sitting at 100. I've already taken a one. I've already taken a short position on the pound. I'm taking a small short position on the pound at the moment. Yep, I'm about to start building a new position. The rest is about $8 at the moment. Let's see. Let's see if it'll respond. That would be the end of the pullbacks. And I'm watching gold very, very, very closely because I want to short gold. I don't want to buy gold. I want to short gold. So I've been watching gold very, very, very closely. It came down, hit 4,000, and it's kind of stalling at 4,000, but It's kind of stalling at 4,000 at the moment. Looks like it's bottoming out, but I doubt it's bottoming out because with this particular pressure from the US dollar, I think it's stuck in between 4,000 and 4,001. So you can see how I'm using price levels. That is how I look at the markets. I look at it after I understand after the macro tracker gives me the dollar bias. The next thing I do is I mark price levels because I look at the market as from prices. Okay. So I look at the market from price levels. Let me mark 1.33 on the pound. Way above 1.33. We are sandwiched in between 1.33 and 1.34. Sandwiched in between 1.33 and 1.34. Well, I don't know if the pound would obviously make its way and complete the 1.3 to 1.34 before the drop. I'm not sure at the moment. But if it does not, if that doesn't happen, then it could stall around where I've taken my short position. And we could potentially see us drop below 1.33 and then eventually head back below 1.325. Yeah, so far as the macro and the fundamental stays bullish on the US dollar, I am buying the dollar. I am not selling the dollar. I'm just looking for potential opportunities to get long on the dollar while I short things like the pound. I look for potential opportunities to short things like gold and even euro and the Aussie as well. Yep, the Aussie as well. Bitcoin too, um, kind of pulling back this particular week. It seems like it's bottoming out for the time being. Probably head back higher and eventually drop. Yes, but once the dollar is bullish at +6, I'm looking at going opposite of every market that the dollar is paired against. But I need to understand the technical bit first. I need to know if the market is ready to drop. You understand? Yes. hmm So let's see how things go. Let's see how things go. We could potentially see the reversal start kicking in. So yeah, if you want to get access to the SOG Capital Macro Tracker, it is not only, to help you get a direction on dollar, it also helps you understand how these things work. Because if you can understand how I do it on the US dollar, you can build your own tracker you can build your own, macro and fundamental tracker for, let's say, Japanese yen, for the Canadian dollar. You understand? Or you can even reach out. I could build one for you. You pay something small. You understand? I build this for the US because I trade a lot of most of the markets I trade is dollar biased. That's why I built this particularly for the US dollar. You understand? So if you want to get access to one for, let's say, the yen, the euro. If you're a yen trader, you're a euro trader, you could reach out. I could build some for you. We could talk about price and all of that. So this is it. Yep, I'll be ending the video here. Dollar sitting at 100. I have a feeling the pullbacks for this particular week will be done and we could start launching forward. I have a strong feeling like that. I'm just waiting to see how things play out around this particular level. All right, so take care, stay safe. And checking the captions and the comment sections. The captions, I'll put the link to the macro tracker and everything over there. It's not expensive. It's a monthly subscription. It's at 200 Ghana cedis per month if you're in Ghana. And I think if you're outside Ghana, just convert 200 Ghana cedis into your your currency. Now, and one thing I would say is the market tracker is something that every retail trader needs. Every retail trader needs. Every retail trader needs to have access to it because it's going to help you understand from a macro perspective where the US dollar sits. That you can use that to trade all your other, markets. All right. So take care, stay safe. Bye bye.